Hi, I'm going to walk through exercise 7-18A here in case you need extra help doing it. So we're just going to start. First of all, exercise 7-18A. If we look at this, they have a bookstore that paid $483,000 for land and built a store. Prior to construction, they had some costs for a building permit, architect's fees, construction costs, and interest costs paid at the completion of the project. Okay, so we need to journalize transactions for the following and then answer a couple questions. So we're going to jump right into this. The first requirement there, and what I've done is I've eliminated the requirements below so I have enough room to write. And up here is what we're doing. Requirement 1, journal entry for the purchase of land. So the journal entry for the purchase of the land, if we look here and we see up here that we paid $483,000 for the land. Okay, so that was it doesn't tell us when, so we'll just go with whatever date. We are getting land. Okay, so we're going to debit land, and that's for $483,000, and we'll have a credit for $483,000. And we look at, see, they paid for land. It doesn't tell us how they paid for it, so we assume cash. Okay, so that's that first entry, journal entry for the purchase of land. Okay, so now we're going to go on. Let's go on to entry requirement 1, entry B. This is a journal entry for all the building costs. Now they said to do all the building costs in one entry is what they told us in the requirements. So now if we start looking through the entry for the building costs, so we are going to look at, we have $1,300 here, we have $15,300 for architect's fee, we have construction cost of $685, and interest cost. Interest cost during construction is part of the cost of the building. So if I add those four numbers up, I will end up with, let me write this down here, $729,820. Okay, and what that is that's all the costs of my building. So I'm going to debit this. Building is an asset, it's a plant asset. Now my credit, let's see how we paid for it. It said that we paid for it with we paid the construction cost. Okay, so this is interesting here. We paid the construction cost of $685 financed by a long-term note payable. Okay, long-term note payable. So we're going to do our journal entry, and let's do a note payable credit. Oops. Okay, and that would be for $685,000. Now, the other expenses up here, the $1,300 for a building permit, for the architect's fee, and the interest costs, those are all going to be cash. And if I add those three numbers up, the $1,300, the $15,300, and the $28,220, I'm going to get $44,820. And I'm going to credit cash. Okay, so that's my second journal entry. So then we move on to the third journal entry. The third journal entry is to do the journal entry for depreciation on the building. Okay, so depreciation on the building. So let's do some calculations here. If I look at this, my whole building cost that we calculated last entry was $729,820. Now, the residual value is $336,000. That's given in the problem right above here. Okay, so the difference there is my depreciable cost. I'm going to take my depreciable cost and divide that by 35 years because the useful life on this building is 35 years. We're told right here that it's 35 years. And so that will give me the straight line depreciation per year. Now, it was completed June 30th. That's halfway through a year. So what we're going to be doing is we're going to multiply that by 6 months out of 12. Okay, because the June 30th, half a year of depreciation on December 31st. So again, this is our cost, our original cost, and that was we had back in journal entry B. This is our residual value, and then 35 years is the life. They told us what the life was. And then here we have from July 1st to December 31st, 2012. Okay, so 6 months out of 12. Okay, so that total is going to be $5,626. $5,626. The depreciation journal entry is always going to look like this. We are always going to debit depreciation expense, and we are always going to credit accumulated depreciation. Remember that accumulated depreciation is a contra asset account. It has a normal credit balance, and it goes on the balance sheet with the assets. Okay, so that was requirement 1, entry C. So now we go down, and it asks us to show how the plant assets will be reported on the balance sheet at December 31st, 2012. So how it's going to work on the balance sheet is we are going to, okay, so how will I do this? Okay, balance sheet, so we're doing the balance sheet. We're going to have plant asset section, and we're going to have land. Land is typically first. Land is $483,000, okay, because that's what we paid for the land. And then we have building, okay. The building, again, that cost we had is $729,820. That was from entry B. And then we're going to less our accumulated depreciation. Okay, and that's going to be $5,626. Okay, so if I take the $729,820, subtract the $5,626, I'm going to get over here the net building of $724,194, and we'll call that building net. Okay. Okay, so that is what we just did there, was we did the balance sheet. Okay, so then the last requirement in this problem is to show how this, what's on the income statement related to all of this that we've just talked about. And there's one line from all of this that we've talked about on the income statement, so we're talking about the income statement. It will be an expense. Depreciation expense goes with our expenses. And our depreciation expense for that year is $5,626. And that's it. And that's it on how you do this problem. Not a bad problem, just go through step by step.